Happy New Year, everybody, and welcome to the first Mortgage Myth Monday of the year. It's been a while since I've posted a video, so I'm going to try to roll right into this. But this is a topic that I've really talked about multiple times, but it always comes up. And really, what I want to do is kind of establish why it's so important for you to work with a mortgage originator who's going to take the time to actually review different loan options with you. These numbers are generalized, but it is based on a real life recent scenario I've had. So we're going to use in this example just the idea of buying a $200,000 house as a first time home buyer who's fairly knowledgeable about FHA and is thinking that's the type of loan that they want to do. Also has really great credit, no qualifying issues. So I'll kind of speed through the math part of it because that's not the full point, but the last number is the number I want to hit you with. $200,000 house. FHA requires 3.5% down. That means you have a $7,000 down payment. This person does have money saved and wants to pay their own down payment out of pocket. Okay. That loan was at 3.5%. There's also a 3% down conventional option available for this buyer that's at 4% interest rate. So 3.5% interest rate on FHA with 3.5% down payment, which is $7,000, or 3% down on the conventional loan, which is $6,000. So a little bit less money out of pocket on the conventional loan, but a higher interest rate. The difference is in the mortgage insurance. FHA's mortgage insurance rate is higher at this credit score for this borrower, and you have to have it for 30 years, whereas on the conventional loan, you can get out of mortgage insurance. It actually falls off automatically if you pay it long enough without you having to refinance. So real quick, on the FHA loan, that borrower's payment for that $200,000 house would have been $1,018.53 a month. The conventional loan with $1,000 less out of pocket up front and a higher interest rate because the mortgage insurance was cheaper was only $1.42 higher per month. $1.42 higher per month. So $1,000 less out of pocket, almost the exact same monthly payment. But here's where the big number comes in. Because FHA now requires you to pay the mortgage insurance for the full life of the loan, which in this case would be 30 years, this person's total amount for just the mortgage with mortgage insurance over 30 years at a lower interest rate of 3.5% is $366,670. So that's how much that $200,000 house is going to cost that person over 30 years for financing. The conventional loan, the mortgage insurance would fall off automatically a little over 9 years. So after 112 payments, the mortgage insurance would go away. So even though the interest rate was higher at 4%, the total payments over full 30 years would only be $343,929, and you'd have almost 21 years with a payment that was $96 a month lower than you would have had on the FHA payment. So I know that's a lot of math and I don't have it written down, but the one number that I did write down, it's probably in reverse for you, but that number is $22,741 lifetime savings. So that's how much money this person would save over the life of the loan by taking the conventional loan at a higher interest rate versus the FHA. Plus, you add on top of that an extra $1,000 because it was $1,000 lower down payment for them as well. So that's what I mean by make sure you're working with somebody who will actually point that stuff out to you, because I'll tell you, the average loan officer, if you call them and say, I'm thinking about doing an FHA loan, they run your qualifications and see you qualify for it, and they know they can hit you with a lower interest rate on that loan than on the conventional loan, they're not even going to give you the option for the conventional loan. They're just going to stick you in the FHA because you qualify for it, and that could cost you $22,000, $23,000 over the next 30 years of your life. Now, I don't know about you, but there's a lot of stuff I could do with $22,000, $23,000 over the next 30 years of my life. But that's been Mortgage Myth Monday. Reach out to me, 615-878-6998. Thanks.